Hello guys, welcome to today's episode of educational content. This is Genesis Forex right here, and I bring to you good tidings, guys. So this will be a very quick one. This is the video title is how to choose the right order block. Now, as basic as this concept is, a lot of traders, should I say, beginner traders, still find it hard. So without further much ado, I really hope at the end of the video you'll be able to understand how to take the right order block. So quickly, what is an order block? An order block can be said to be, we have two kinds of order block. We have the bullish order block and we have the bearish order block. So the first one, which is the bullish order block, is the order block at which the market buys from, which is said to be the last down candle before the up move. And then the bearish order block is where the market sells from, which can be said to be the last bullish candle before the down move. So let's go first to the bearish order block. For example, we have here could be an order block, because this candlestick right here is the bullish candle, which happens to be the last bullish candle before the down move, right? And also we have the bearish order block here, which is where the market sells from, and it is said to be the last up candle before the bearish move. So in the market we can have different kinds of order block, right? Now, but not all order blocks are valid. So order blocks are just type of fancy for induction of liquidity before it gets to the real order block. So this video could help you to choose the right order block for you to take from. Now, the first thing that you must know as a trader using the order block concept is that your order block must break structure. This is structure. The order block must break structure, then returns there before it continues to sell. Or if you're trying to buy, it must do something like this. Right, this is what you should do before it actually you can take the order block seriously, or you want to take a buy from that particular order block, right? So something like this, that is your bullish order block, because the market buys from that zone, and here is the bearish order block because the market sells from that zone, right? So look at the template again, very simple. The market must break structure. That is the first thing we're looking at for. This is the break of structure here. So until the order block breaks the market structure, you cannot call that place a valid order block, right? Now, this is what makes an order block valid. One of the things actually that makes the order block valid. I don't want this video to be too long, so I'll just make this video in two parts. So this is the part one. Now, we've been able to identify our order block. So once we see the chart, we know that this is an order block. Don't forget that order block is the last, the bullish order block. So the bearish order block, it is the last up candle before the down move, right? And let's mark it out so it will be easy for us to identify. So we've marked it out. This is our bearish order block, which means we are expecting the market to sell from that point, right? And now this is the bullish order block, because we're expecting the market to get to this point and then start to buy. So don't forget, the order block is in two parts. We have the bearish order block, which is where the market sells from, and we have the bullish order block where the market buys from. And the bearish order block, we say, it's where the last bullish candle before the bearish move. Now, that candlestick that you're seeing there is a bullish candlestick. Now, subsequent candlestick after that last candlestick are all bearish momentum, right? So that's why we call it an order block. And this one, this is last bearish candle. This is the last bearish candle before all the up move started, right? Now, this is one of the reasons or the criteria that can make your order block valid. Number one, it must break structure, which is the low or the high. Yeah, in this case is the low. So this particular order block broke this particular low, right? And also this particular order block broke this particular high. So since we are done with that, let's proceed to the chart itself. Let's proceed to the chart itself now. So we marked this place as an order block because that was the last up candle before the bearish move, right? So we expect a sell from that zone. Now, why is this zone valid, or why is this order block valid? It broke this particular structure here. So your order block must have a break of structure before we can call that order block valid order block. So this particular order block, it came down to break this structure, this particular low, right? So that's how we call this place a valid order block. So that is one of the reasons. That is not all the reason though. So in part 2, I'll state more reasons why an order block would be considered a valid order block. So one of the reasons here is break of structure, so that targets this external liquidity here, right? So this is just what we're expecting. This particular order block, you can see it came down, it broke this low, which is the structure there. So and now the market is reversing up. We expect the market to get to this particular point before it starts selling, right? So now let's list and now let's look for another block. We have another block here. We have this particular one as our order block, right? And don't forget, I think let me state this clear again. The wick of a candle can be considered as an order block too. So this is a very very information. The wick of a candle can be considered as an order block. That is, the wick of a candle on a higher time frame can be another block on a lower time frame. So look at this wick from this place to this place, right? So look at the wick. We can consider that wick. You can use the wick as our order block. You can use this wick here as our order block. So that is if we don't want to use this particular one, right? Let's assume we don't want to use this particular one. You want to refine your entry, you can actually make use of the wick. Yeah, you can see the market tapped in the wick and then started dropping. So that is that about that. So that wick you can use as our order block also. Now you can see the wick broke this particular low structure here. This particular low, the market, the other that particular order block broke this particular low here, right? So once a block of structure is created, we can put our sell limit. We can put our sell limit at this particular zone here, right? Then your stop loss quite above the high. I do not put my stop loss here. I don't put my stop loss exactly like this. I put my stop loss above the high like this. So then you target down, which is the external liquidity at this particular zone. So you can see now that the same concept we've used to take this particular trade, and that is the same concept we are trying to use to take this particular trade here, right? So that is that about that. Let's move further. Let's see if we can get more order blocks. I wouldn't call you an order block because there was no valid break of structure, right? There's no valid break of structure, so I will not take that as an order block. Now, considering this place now, I would like to take this place as my order block, this particular one here as my order block. Don't forget I said the wick can be used as the order block also, right? So look at this wick here. So you can use this wick as order block, but unfortunately the market did not get to that zone, right? The market did not get to that. The wick is mostly used to refine your entries. If you want to have a smaller stop loss and you see a wick, you can actually make use of the wick, but there's chances also that price might not get to that place. When you over refine your entries, price might not really get to that zone. So to be clear on that. Now this particular place, I'll probably use this particular order block here. Now why should I use this order block, or what makes the order block valid? Like I said, an order block must break structure. So there's a potential break of structure around this point here. So let me go to lower time frame. We go to 30 minutes time frame. Let's see if we can truly get a break of structure at that particular zone. Okay, this is this here, right here, this right here. Boom. So on 30 minutes time frame, you can still get an order block on the 30 minutes time frame. So this order block is very, very valid, right? Now why would I choose that order block, guys? Like I said, your order block must have a potential break of structure, right? So this place here is a break of structure here. This particular low is a break of structure. So we bring it out. This particular low is a structure. Now you see what happened. The market came down, broke this particular structure, and then went up again. Boom, went to touch our order block. So that is one of the most basic criteria for choosing or selecting an order block. Your order block must break structure, must be a break of structure for your order block to be valid. If there's no break of structure, trust me, that order block is not valid. Whether it goes your way or not, that order block is not valid. So guys, now it depends on the kind of trader you are. You might want to take all the trades to this external liquidity. This is the external liquidity here, which becomes the swing low, right? So here becomes the swing low here, which the markets will be targeting as the external liquidity. We also have other internal liquidity, which acts as the low in the market. We have this particular low here, right? We have the particular low there. We have this particular low here. So all these places are internal range liquidity, right? That you can use as a TP1 or TP2. So if you're selling from this place, you can use it as a TP1, you can use it as a TP2, then final TP, right? Now, what happened in this market? You see that the market went all the way down, boom, and it went all the way down to this place, right? So you can see that this concept about the order block is actually very nice. It gave us about 8 to 6 risk to reward. This one gave us 5.1 risk to reward. So guys, that is for the order block for today. Don't forget, an order block is a zone in the market where the market reverses from, right? And we have the bearish order block, and we also have the bullish order block. The bearish order block is the order block that the market sells from. In that case, we call it the last bullish candle before the down move. And when it comes to the bullish order block, the bullish order block is a zone where the market buys from. And in that case, we say it's the last bearish candle before the up move. The last bearish candle, for example, this particular one here is the last bearish candle before this up move, and this one here is the last bearish bullish candle before the down move, guys. So that is what will make our order block. And concerning this particular trade, I know most of you will be looking at this particular trade here to want to take your trade, but please, this content is just for educational purposes only, and it is not a financial advice. So if you're going to take this particular setup on Euro USD, make sure that you do your own research, and I will not be liable for any form of losses. This is just to prove, or this is just to teach the concept of the order block. So if you want to take that particular trade, make sure you're doing proper risk management on that particular trade, guys. So see you next week on the part 2 of choosing the right order block. Like I said, I just gave one criteria in this one, which is the break of structure. You must be a valid break of structure before our order block becomes a valid one. So guys, see you next week. Peace out.